Hey everybody, Greg here. So, a little bit of a disappointment after Friday's run up into the close and buy. You know, traders, institutions falling all over themselves to get in on Friday. And today's gap down was obviously a little bit of a surprise, but it didn't mean it had to turn into the route that it has. But it just kind of fed on itself when buyers didn't show up at these support levels down here, which often happens. Right? You look to the left, you see these pivots where there were buyers before. There was a stall, and when it failed, more are going to hit the bid. So now you can see on the 65-minute here, prices are at the bottom of the trading range. S&Ps have stabilized for the moment. They're struggling. The advancers minus decliners is about minus 1,000 or so. So, bad, but not terrible. There'd be probably little to no chance of it flipping back up, any kind of a meaningful reversal, if it was at, say, minus 1,500 or lower. So some buying going down here. You see the pivot low, and it's just hanging down there real slow. It's lunchtime. Not quite 1 o'clock yet, but, just the small candles ranges down there. So little buying, but no real enthusiasm. And you can see even the wider bars where buyers stepped up more aggressively down there, and now less aggressively, and now they're barely stepping up at all other than to hold it in place for the moment. Certainly not the place to be shorting. If it broke the low, it could flip right back up in your face. So, down at support like that. The Qs, weaker. He had this buy set up there. It didn't trigger. We were looking to get long that above Thursday's high, so no foul. Gap down, nothing happened. If it would have reversed back up again, well, we would have considered it, of course. But now it's on the 20 MA, and you see the unfilled gap there. I'm not sure it's going to fill that gap or not since it's on the 20. It's at the top of that bar. So, when so many are looking at the same thing, in this case, go ahead and fill the gap. And you can see on the 65-minute chart, maybe it gets down there. But sometimes, the top of the bar, because the gap fill is anticipated, buyers will step in ahead of that. But so far, it's just stabilizing. Again, you can see the wider bar, a little smaller, and just real quiet right here. IWM, new low. It's on support. Looks like it's got to come down there to the 20. Set an alert down there at those pivots. Let's see if it makes the turn. Diamonds. Everything's weak here. KRE holding up relatively well. Financials are holding up decently here, but just chopping sideways, so nothing to do. You can see XLF inside day-ish. It took out the high, and so while it's up a bunch, look, it just keeps moving up. There's no pivots. Here it broke a prior day's low, immediately reverses. So what we look for a more significant indication of weakness would be a close under a prior bar's low, and that certainly wouldn't change the trend, but it would be a change from the bullish price action that's been going on for a while. Consumer staples are up not even 1%, but it's the best performing sector in the S&P. TAP was the big winner, and what a bottoming type of a pattern. It didn't suggest it could do something like that. I don't know if there was news, maybe there was, but that is a significant move. And the next best performer here is STZ. Decent day, at support, but downtrend. So to have a move like that, certainly not what the pattern would have suggested. There's another one. That one a bit better, right? And a little buy set up there. And I think institutions are, primarily being focused on these staples. Defensive. Also defensive is real estate, which continues to grind higher. Utilities, grinding higher. Healthcare. So those are the four sectors that have been outperforming recently, and they continue to, while technology is the worst performing sector. And while it looked like possibly it could hold this area, now it's failing and looks like it's going to continue to go lower. There's an unfilled gap down here. There's, not Not much support. There's a pivot right there. You can see on the 65-minute, this red bar that was ignored. So there's a little support there that it's coming down to. We'll see if that makes the turn. And so, look, so far it's an ugly day. We'll see where it closes, whether it can lift off a bit or not. Semiconductors, of course, not looking good. NVIDIA is down on the day. Even Apple, which I mentioned in the weekend letter, that NVIDIA looks like it's going to go lower. And I said if Apple was to join that to the downside, and look, the pattern didn't suggest that, but it's just common sense. If you've got, NVIDIA going down and Apple going down with it, it's going to be pretty hard for the Qs to hold up. And, some of the others, Meta doing better, but still down on the day. Google, moving lower, and, Microsoft weak. So really, other than an intraday bounce, which still may be coming as we get a little later into the afternoon, so far, this is holding for the moment. But if those have an intraday bounce, of course, this will bounce a bit. And the question is, where does this end the day? Bottoming tail bar or an ugly red bar that would suggest it's going to go lower? We'll see where it is. Any questions, email us, Greg and Dan at Master Trader.